Hello and welcome to the day ahead. It is Tuesday, August the 23rd. I'm Andrew Gagan. Well, negative investor sentiment has dragged global markets lower. US shares fell sharply and the dollar surged as fears mount that the central bank efforts to tame inflation will weaken the global economy. The Dow closing off 1.9%, the S&P 500 lost more than 2% and the Nasdaq falling more than 2.5%, with all 11 of the major S&P 500 sectors sliding. Once again, the S&P 500 has failed to clear its 200-day moving average, a sign that it would be moving out of a bear market. Meanwhile, Europe's benchmark stocks index closed down 1% after Russia's Gazprom said it would halt natural gas supplies to Europe for 3 days at the end of the month. Well, on Wall Street, Amazon, Nvidia, Microsoft and Tesla all tumbled as Treasury yields rose. And Zoom cut its annual profit and revenue forecasts as demand for the video conferencing platform continues to cool from those pandemic highs, sending its shares down more than 7% in extended trade. Meme stocks suffered. Shares in movie chain AMC Entertainment plummeting almost 40% on news UK-based Cineworld has warned of possible bankruptcy. And Bed Bath & Beyond and GameStop also sliding. And taking into account the summer rally on Wall Street, which ended last week, the S&P 500 is still down about 13% this year, while the Nasdaq remains firmly in bear market territory, down more than 20%. And Wall Street's fear gauge, the VIX, has risen to its highest level in more than 2 weeks. Well, the immediate focus for markets is on Fed Chair Jerome Powell's speech on Friday at the Central Banking Conference in Jackson Hole. It's expected to provide further cues on the Fed's or how aggressively it will be with future interest rate hikes. And the Fed funds futures are now pricing in a more than 54% chance of a 75 basis hike by the Fed next month. Meanwhile, the closely watched recession signal, the inversion of the US Treasury yield curve, has widened. The 10-year moving above 3%. The 2-year now is up to 3.32%. The US dollar is at a 3-week high. The Aussie currently at 68.9 US cents. And in US economic data, the Chicago Fed Reserve National Activity Index lifted from negative 0.25% to plus 0.27 in July. And Citi is forecasting inflation in the UK to peak at 18.6% in January, more than 9 times the Bank of England's target. Well, the local share market is set to extend yesterday's losses as the mood on global markets deteriorated overnight. ASX futures currently off 0.6%. Has been a volatile session on oil markets overnight. The price of crude initially falling 4% before rebounding, Brent crude finishing marginally lower. This as Saudi Arabia said OPEC Plus could cut production to confront market challenges. Iron ore futures made modest gains while base metal prices were mixed, and the gold futures price falling 0.8% as the US dollar and Treasury yields rise. And the crypto market continues to show signs of weakness, Bitcoin settling just above 21,000 US dollars. On the reporting cards today, Boral, Breville, Endeavour Group, Reece, The Reject Shop, Hub24, Kogan and Centre Group, among others. And Ansell's results are out. If we EBIT there at $228 million, down on the previous year. Sales at $1.95 billion, down also, and it's paying out a final unfranked dividend of 31.2 US cents a share. And that is your day ahead. We'll see you again tomorrow.